All right. So like Ryan said, Ballard Power Systems, symbol BLDP on the TSX as well as the NASDAQ under the same symbol, is a developer and manufacturer of proton exchange membrane or PEM fuel cells, a type of hydrogen fuel cell. The company is targeting the medium and heavy duty mobile market, so buses to trains, as well as stationary power applications. The stock trades at $1.70 US, down 53% year to date at a market cap of $510 million. And zooming out further, I'm not even going to go to 2000 when it had another peak there. But in 2021, it has actually fallen since that peak in 2021, over 95%, which is just not great, obviously. So what has driven this decline? And does the financials and operations really give any hope for recovery to either these levels or just an improvement from this $1.70 figure where we're at now? So first, we'll look at a 10-year high-level view of the income statement. We can see stagnation in revenue really after 2017 in that $100 million range. But further, we've seen a further decline into now a gross loss. This means every unit sold produces additional losses at the current cost and price combination. Sometimes you will have a bit of economy scale within the cost of goods sold, but it's not the major factor. You might have, let's say you have a production line, a person can do one unit and then a quality control person can actually look at 100 units at a time, but they're only making 50. So you could double production and that would appear in cost of goods sold, and that'd be economy of scale with cost of goods sold. But that's not always true, and that's something you really want to watch. But it can shift over time. Further, the company has never been operationally profitable on an annual basis and is not profitable in any sense for net income either during this time period. This means over time, when you do see these consistent losses, the operations needed to be funded by first existing cash and then by raising capital through either debt or equity issuance or selling assets in some manner. Ballard has gone down the equity issuance route, having outstanding shares increase by 126% over the past decade. This is even with the company taking advantage of that euphoric share price in late 2020, early 2021. In the graph I have up, you can see that when the shares are issued, the cash balance goes up. And then, of course, it just trickles down over time because they're continuously cash flow negative again and again. And it hasn't really changed. And they really benefited from that share issuance time as well. In reality, they've been fueling themselves not really on hydrogen sales, but on share issuance. That's really been their most profitable venture at this time, which is a bit worrying to say the least. The cash balance, however, currently sits at $678 million, and that's actually higher than the company's current market cap. Whenever I see something like this, that's normally a massive red flag because people always say, oh, why don't you just go in and buy a company? In reality, you can't do that because it would bid the share prices up. But that means at this time, the market is actually valuing the operations of the company negatively. If you could just do a one-to-one, I get all the shares at the current price, something has to negative off that cash flow, and that'll be the the cash balance, not the cash flow. So leading us to the Q2 2024 results, the last quarter, the company had a $16 million $60 million in revenue, a negative gross margin of 32%, and a net loss of $31.5 million or 11 cents per share. The company's 12-month backlog fell quarter over quarter to $169.5 million. Also, I will note, if you look at their previous backlog, and they provide a 12-month backlog, is the actual revenue, if you look at the realized revenue, was only about 71% of their initial backlog of Q2 2023. So you only have a backlog to revenue conversion rate of 71%. So this is something I've brought up before, and I know the rest of the guys on the podcast have as well, is when you're evaluating a backlog are they actually converting? And in this case, they're not converting one-to-one, which isn't uncommon, but it is something you need to be aware of if you're looking at this and saying, oh, they're actually looking at growth now. It's really actually quite a similar backlog to what they were expecting in the last year. The company does provide expense guidance, not revenue or profit guidance, but they have updated the total operating expenses of the company to be $145 million to $165 million. And then a change in the CapEx expenditure, I should say the total operating expenses is the same as what they had at the start of the year, but a lower CapEx expectation of $25 to $40 million. So last week, September 12th, the company announced a restructuring of the business. The CFO and the CEO have been replaced or are going to be replaced by the end of 2024. A plan to reduce total operating expenses by 30% in 2025, with the reason being to align with the delay in market adoption of hydrogen infrastructure, hydrogen fuel cells, and so on. As a part of this plan, the company is as well conducting a strategic review of its Chinese joint venture, Weiche Ballard, which it has a 49% stake in. That's common for Chinese ventures. Is it'll be the local company being 51% and then the foreign entity, in this case Ballard, being a 49% stake or something like that due to Chinese regulations. But they might leave that, they might change it. That's what a strategic review will be doing it during this time. Effectively, the goal really is to extend out the company's cash, hoping for hydrogen infrastructure and fuel cell technology and demand to increase. But that is really speculative at this time if it is going to increase. Fuel cells, especially hydrogen fuel cells, has been just something that's been going on for decades at this point. If you've looked at the company's history, like I said, it was surging in 2000 as well, not just a few years ago. So really put together, the company's operations just have not been, and in the current state of hydrogen infrastructure and fuel cell market, are just not financially viable. The company does have the ability to lean on its cash balance at the current burn rate for 4 to 5 years, and maybe a bit longer if they're able to temper losses in the coming years with post-structuring or restructuring. But that really brings me back to why they have the cash in the first place. It wasn't due to profitability or successful ventures. They didn't sell off something successful and just were left with the scraps. It was because they were share issuing, that they had significant share issuance, and really were lucky. That's what comes down to some of these companies. Is the market was euphoric at the time. They were in 2000 as well, leading to these massive cash balances, which unprofitable companies can lean on for a time being. And that was really just absurd valuations and unrealistic expectations for, this is across really the hydrogen market, hydrogen fuel cell market as well, not just Ballard. So sure, there's a chance that there could be a turnaround in 10 years, given this cash balance. They do have some runway, that which is better off than companies which are already in a net debt position, already needing to dilute quite a bit more than 126%. But that's not really something I would want to count on. That's really just being hopeful at best. It's a gamble on the hydrogen fuel cell market really improving, demand increasing, and then being able to eventually shift into profitability. And when you're looking at a company with effectively at this point a 30-year history and it's not profitable, that is just concerning in its own. Even if they do restructure, that's not something I would be willing to bet on, and that's not something I would want to invest in either. So I'd just stay away, as it's not operationally successful, and it really doesn't have a strong path or even a forward to pathway to get to the operational success it would need to even support its current valuation, excluding the cash.
That's good.
I think you're right, definitely. I mean, this company was lucky as all hell that they raised capital.
They've been around
did.
for a long time, and if they haven't figured
yeah.
it out, I mean, they're still losing a couple $100 million a year, almost double the level of revenue. I mean, if they haven't figured it out by now, this has been decades they've been at it. So
Yeah, they raised the amount of capital that they did, and then you just have that cushion. And again, there's a culture in this business of not having to produce any profitability. I mean, they've had the next great technology for a couple decades. It also shows you how long it takes to bring a new technology forward. And as far as an investment, I mean, it's a poor investment in if they can never, over a 20, 30-year period, produce anything close to profitability. And it's just not there for this business.
like
Perhaps at some point, but you invest based on hope and a dream, which is what this business is, with a poor culture in terms of creating profitability. And this is what you get.
Yeah, I kind of like got into it with my cousin like a few weeks ago, or maybe months ago, because he has in his head that he thinks that there's no doubt that hydrogen fuel cells are the future. And it's just like, haven't we already seen the market decide that that isn't the way that we're going? Again, I'm not saying that these applications can't be
but
used.
your cousin's smarter than the market, though.
And he understands the
but
technology.
maybe the future will
We
be.
don't understand the technology.
No.
He understands the technology.
And maybe it will be, but again,
maybe the future will be hydrogen. Does that mean
and we're not multi-billionaires, Brennan?
Does that mean Ballard is the one that's going to be successful too? Like, that's what, even if you are right, that, even if he is right, does that mean Ballard is going to be the company? So you have multiple layers of risk before you get to. And again, this is what we talked about at our webinars. everybody's buying a company like Ballard because they want to make 10x, 1,000%. They want to make, because it's high risk and they want to make that return. The data tells you that 90% of the companies that actually went up 10x over the past decade basically were profitable before they started going up. So look for those companies if you want to have even a chance. Profitable, smaller, and growing. Don't look at the unprofitable businesses out there. It's just not where you're going to find the returns you're looking for. Not me telling you, that's the data telling you that. So anyways, we'll say that over and over again on this podcast.
Yeah, people have heard it.
You think?
Yeah.
I know. What were you going to say? Sorry, anything?
I was just going to say the caveat is unless you understand the technology. I'm joking. I'm joking.
Well, and that's like Ryan said, is even if we did understand the technology, is it might work, but is it even financially can you even profit off of it after the technology even works? That's the funny thing, is when you have those technology gurus, yes, the technology may be fabulous, may be the best, it may be the improved version, but if it costs too much and doesn't actually meet the financial obligations of a shareholder, it's still not a good investment. So there's another hurdle.
There's many examples of that, even the best technology not even winning out. Like if you go back to like tape cassettes, there was beta and VHS. I don't know if Aaron remembers this, but it was proven out that beta was probably the more advanced, successful technology to use. It VHS won out for one reason that I don't even know if I want to mention, but the porn industry basically went with VHS, and that's everybody went on to that, and that was it. Apparently, this is what happened. So, Aaron knows all about that. What am I saying? Sorry.
Sounds like you know all about
one of the reasons that VHS won. No, yes. I still have my beta. I wouldn't even go DVD.
Yeah, you wouldn't. You still like beta. Just like vinyl, the beta picture is so much better, right? That's what you think. The sound on vinyl is better. Aaron's beta sounds better. It's not really.